What's next for the gold price after it has repeatedly broken new all-time highs throughout 2024? Shane Williams, CEO of West Red Lake Gold, is here to give us his update on his views on the gold mining industry as well as the gold price itself, and to give us an update on West Red Lake Gold Mines. Very interesting project backed by important investors, including Frank Justa. Welcome back to the show, Shane. Always good to see you.
Excellent. Great to be back, David. Great to be back.
Congratulations, first of all, on the success of the company so far, but also on the call that you've made on my show several times this year. We spoke back in April when the gold price was trading around $2,200. 2 months ago in Vancouver, we spoke in person. You had given me a forecast of $2,500, I believe, for later this year. First of all, are you still backing that number? And can you provide a reason as to why gold may go up another $300 or so from here?
Yeah. No, look, I still have that sort of target in my mind as we move forward. We've seen we've seen huge rises since that last meeting, Dave. We were hovering around, I don't know, I can't remember the exact number. We were hovering just over 2,000. We're just beginning to hit that 2,200 sort of mark. And I do expect that sort of trajectory to continue.
A 25% increase in 1 year is a lot, but it has surpassed your expectations. What's your initial reaction to seeing gold go beyond $2,500, which is what you told me would happen?
Yeah, look, we did expect, as you said, we've talked about, we did expect some increases in gold price, as a part of the strategy of the company is just to build a company and as the gold prices are elevating and increasing. But the speed of the increase has been very surprising, actually, David, given it's moved very rapidly above that. Once it got above that 2,200 sort of range, it moved very quickly. It's been if you look at the last 6 months, it's even been very, very rapid range. And now we're approaching 2,700. It's broke through 2,600. So it has surprised the pace of the increase. Definitely. I thought it would take longer to get to that level for sure. And it would I thought it would have some consolidation and then move higher, but it seems to be going higher all the time. Maybe there's a consolidation phase coming, but certainly up to now, it's been rapidly increasing.
Well, if you flip over to my chart here, Shane, this is the price of gold. And as you can see here, it's just been steadily moving up in a straight line. This is going back to 2018. We haven't seen this kind of a move since basically 2011. Now, I think I want to get your perspective on this because you're an insider in the industry. You're involved on the ground in mining. What is different this time for the industry versus 15 years ago in 2011?
Yeah, look, I think that most of the gold miners, most of the seniors have kind of learned their lesson. During the last big run-up of gold in 2010, 2011 and onwards, there was a lot of, M&A, and that was really just M&A for the sake of M&A. The industry got very slapped hard later on over the next number of years from a lot of write-downs, a lot of resets, in that the industry went a little bit crazy on buying each other and growing faster, et cetera, and that all over the next number of years after that initial boom, that kind of petered away. And we saw this time we're seeing a little bit conservative from the miners. A lot of them are generating lots of free cash flow now. Just so your listeners and viewers are aware, like some of the big majors at the moment, like the Gold Corps, the Nuance, the Barricks, they're generating a lot of free cash flow at the moment. And they're talking about more returning to shareholders, being conservative, taking their time. We haven't seen that sort of a run-up yet in the junior mining sector, the intermediates, the juniors, the developers. That sort of difference between the gold price and the disparity between gold price and the equities is something that we have never seen for a long number of years. It's very unusual to have gold where it is and the equities are positioned where it is. So that's something new.
Do you think maybe the seniors have already purchased the acquisitions that they've needed to make in the past, and now they have sufficient mine life to reach their targets? They don't need more deposits. Is that possibly the reason?
Yeah, it's some of that. A lot of the big companies have been growing internally and made those acquisitions. As an example, Barrick Gold and Newmont, when they combined in Nevada and created the Nevada gold mines. They made some strategic investments and JVs in times of when gold prices was low. And a lot of them are just using that period now to grow and generate that free cash flow. So yeah, I would say that is part of it, that a lot of them did exploration. They have a lot of internal growth projects that are allowing them to not get caught up into this M&A cycle and just generate free cash flow effectively.
Well, is there a larger shift in strategy from these miners, these senior miners? Are they shifting more towards, like you said, internal exploration instead of acquiring other juniors?
Yeah, I would say a lot of them are more focused on internal growth based on their mines, existing mines, growth opportunities within their existing mines, rather than that. Look, there will be some M&A at the lower level down, but particularly the seniors have a lot of good runway ahead of them with their own projects in now, and have a less focus on M&A of the smaller sort of projects, exploration opportunities.
Actually,
there has been some opportunities already, M&A, but a lot of the M&A today has been very strategic, has been good M&A. If I would look from the industry wide, it's been very strategic and it's very value add up to now.
Well, your company currently, correct me if I'm wrong, is not positioned for a takeout just now. You're positioned to start producing soon. Am I correct?
Yeah. We've moved most of, again, in low gold prices were low. We bought the acquisition. We've put into a very technical team, and we're moving forward into a production decision and moving into production. It's a great time to be moving a gold mine into production with these sort of gold prices. So we're very much going to get that leverage as we move into production. Normally in the gold industry, as developers move into production, there's a re-rating in the stock as you move from a developer to production. But also you have this gold price rising. So the combination of those gives us a lot of opportunity to grow the company as we move forward.
Flipping back to my screen here, this is a price chart of West Red Lake Gold. Over the last 3 months, the company has started to aggressively outperform gold. We're seeing that not just for your company, but also in a lot of other companies in the space. Is capital starting to flow into the miners now? Because I bring this up because throughout the first half of the year, that wasn't the case. If you zoom out, gold was outperforming the company for the first half of the year, and it's only in the second half that we started seeing more interest here in the stock itself. So what's going on from an investor sentiment point of view?
Yeah, look, we are seeing that. Look, it's taken a good bit of time for it to come, but we are now beginning to see a lot of investors come back into the space looking, and really it's all about quality. They're looking for stories, good quality, projects that can get into cash flow fairly quickly. So we are getting a lot of interest in our story, particularly because we, as you've outlined, we're close to production, where we have a good team, we have good backers behind us, we have a good board of directors. So we're kind of a standout story in that developer space moving to production. So we are seeing a lot more interest and a lot more inbounds in this space. And in the industry in general, the junior mining industry has moved up quite a lot in the last 6 months as it's beginning to turn around with equities catching up to that price of gold.
I do want to finish off the interview by getting your, I guess, new gold price update, because it's no longer $2,500. So I'll get a new outlook from you. But let's talk about the company first. So like you mentioned, West Red Lake Gold, situated in Ontario. People can check out our last interviews with Shane, by the way, in the description down below for an overview of the project. We won't talk about the history as much. People can watch that interview for the history. Let's talk about the future. When do you expect to go into production, and what is the scale of production that we can expect?
Yeah, so we're planning to be in production in 2025, late 2025. We're doing a lot of work now, as people will, if they tune into the company and our press releases, really de-risking that asset. We're buying equipment, we're starting test mining. So there's a lot of that to do. We have a pre-feasibility study, which will come out later this year. And based on that, we will start into 2025 on production, moving into production. And how are you a very near-term story.
How are you financing this production? Do you already have the necessary equipment and the human capital in place?
Yeah, we've raised quite a bit of money, so we have quite a good balance sheet as well at the moment, and we've committed to a lot of equipment. People are very accessible in this Red Lake region of Canada. It's a very good mining area, lots of skill sets in place. So yeah, we're in a good position now to ramp up the project and get ourselves into position to be into positive cash flow.
And how much cash do you currently have in your statement? You mentioned
We
you have,
have currently $25 million dollars Canadian on our balance sheet.
and that's primarily going to be used for further exploration or the production itself.
That's going to be used primarily for moving the project into production. That's primarily where we're going to move into production. Exploration is a secondary to us. We've had some nice exploration results, but primarily the focus will be on moving the project forward into production.
How much do you estimate the CapEx component of the production to be?
To get us into production?
Yes.
Yeah, probably somewhere between 60 to $70 million Canadian.
Okay. Well, that's still a lot higher than your current cash balance. So how would you fund the difference?
So obviously we're looking at different structures at the moment. We've been talking to given where gold is, there's a lot of interest in sort of, debt structures and et cetera, et cetera. So we are looking at, we've always talked about the last bit of money in might be a debt facility, a small debt facility, Pure Gold. The problem was they had a big debt structure. So we wanted to have a much lower debt structure. So that's something we are actively pursuing and will be part of that solution to get that final bit of capital into place. That we'll definitely be limiting the amount of equity we do on a go-forward basis.
I'm guessing a lower interest rate going forward would also impact your capital structure decision.
Yeah, it does. It definitely assists on the structure going forward as interest rates begin to turn over now and come forward on a basis. It gives the opportunity to lock in some good financing over the next number of years.
What were the major challenges this year going into preparing your company for production?
Actually, go back to your discussion on raising money was quite a challenge. Back 2 years ago, before gold started to run, basically this year, it's been a challenge. The equity markets have been pretty subdued, and raising money has been a challenge. We've managed to be successful at it, but a lot of juniors in a lot of areas, it's hard to raise money. It was hard to raise money. We're finding that's changing now, but it was a bit of a slog. You had to give away discounts and lots of warrants associated with it. So, it is turning now. So that was the challenge over the last number of 6 months.
Will you still be engaged in exploration and drilling after you start production?
Yeah, we are. We currently have a drill rig on the surface around the Madsen site, doing some drill results on expanding, looking at there's a lot of opportunities still around the site and so around the mine. And we've just had some very successful drill results come out around this new 8 zone. There's an 8 zone, which is very relevant around the Madsen mine. And there's a couple of new zones we've discovered much higher up in the ore body, called the upper 8 zone. And these are quite exciting as for a potential to transform the mine. So that's some of the ongoing exploration, a small amount, but some exciting upside opportunity to this project.
Has the gold price rise this year affected your strategy at all? Has it changed your direction? Has it expedited certain developments? Basically, has it made a difference at all for you?
Yeah, it has. Yeah, look, particularly when we're looking at getting into production, obviously when you're getting a mine into production in this sort of a gold environment, it pays to be in quicker into production. So definitely from, go back 6 months when we were thinking about getting into production versus now, we have definitely sped up that process of when we want to get into production and how we approach that.
Tell us about some recent drill results.
Yeah, we've had the majority of our focus, as we've talked about, has been on infill and definition drilling within the Madsen mine. But this year, we did put one drill on surface around the property. There was some very exciting opportunities around the property to grow the deposit. And we put drills on the property. We've had a very exciting early stage drill hit on a zone we're calling the upper 8 zone. This upper 8 zone is very exciting. It's a very high grade part of the ore body. It's over a 25 gram. There's 100,000 ounces of 25 grams ore body, but it's deep down in the system. But we've tapped into a zone we call the upper 8, which is much shallower, and high grade. So this really gives us the opportunity to grow the project close to infrastructure, close to the mine. to really change the profile of the ounce profile of the project over time.
One of the developments in recent years was the advent of gold mining ETFs. So GDX, GDXJ. Critics of these ETFs have said that they've pulled a lot of capital away from mining stocks when capital could have gone directly to the stocks. Now they're going into the ETFs. Do you agree with this criticism?
Not really, because for the generous investor, to find the right gold mining stock is quite difficult. And the GDXJ kind of does that for you. It brings a portfolio of projects together. And once you get into that GDXJ, you are buying. So whether it's individual investors buying or the GDXJ, getting a listing in the GDXJ or GDX will add a lot of buying opportunity to the stocks. So I would disagree with that a little bit on their view.
Now, how do you position yourself to compete with the likes of tech stocks, rising equity prices overall? Again, one of the challenges I've heard for miners is the fact that the stock market has done very well. Why invest in a smaller junior resource company when you can invest in a large tech stock that has generated very good returns? How would you position yourself there?
It's really, timing is everything in the commodity sort of gold mining sort of phase, and it's really timing around the price of the underlying commodity. When the underlying commodity is doing good, the miners and the gold miners do very well. So it is a cyclical business, so it's about timing. Over the next number of years, I suspect we will have sort of a recession in the US, and we have the issues around the dollar in US, and they're all very good headwinds for gold. And so now is the time to be getting into the gold mining industry, into the juniors, because you'll get a lot of leverage to that. We've seen it very clearly. It started in the majors, and now it's starting to move down, and you'll get a lot of leverage, generating a lot of good returns in gold mining over the next 4 to 5 years.
The most commonly asked question that I get asked myself, and also I hear at conferences, is why invest in miners if the gold price itself has done very well? If you take a look at my chart, once again, this is gold, and let's bring it all the way back to the past 15 years. If you overlay this with the GDX, now let's use on the same percentage scale, it looks like gold has outperformed the GDX over the last 15 years or so, especially because the gold price has retraced a new all-time high, and the GDX has not hit its then 2011 high. Many miners have not hit its 2011 highs. And I think investors are concerned as to whether or not this underperformance is going to continue. How would you convince people that it's going to start turning around?
Well, the way I would see it is that over time now, the bigger institutions will start to come into the money, and you can see sort of there 2010, 2011, there was a big turn in the miners as they ramped up the price of gold. Over time, that disparity between it will catch up for sure, definitely at the price of gold versus the GDXJ or the GDX as well. Over the GDX.
One theory I've heard is that mining has become more expensive in the last 10 years or so. Is that true?
That is true. That is true. Cost inflation, the way the miners price their cost now is an all-in sustaining cost. And the all-in sustaining cost has been growing in parallel with the price of gold. So, you've seen AISCs go up from 1,100 to 1,400 sort of over the last number of years. And the margins, so pretty much the margins have stayed stable. But recently now, with the recent run-up in gold, the margins that the gold miners are having is much bigger margin. Up to now, the margins have been with gold price. This year alone, margins have got much, much higher. And hence, there'll be a lot more free cash flow generated from the margin. And once that happens, the bigger institutions will start to get into these miners effectively.
When you say that the U.S. is likely headed for a recession, maybe even Canada too, what would that mean for the gold price?
So that would be a very positive for the gold price, because normally what happens is if things go into recession, hard assets tend to do very well in that sort of a situation. One would be like real estate, one would be gold, bonds, they tend to do very well if it goes into recession and we have some issues with the stock market, etc. So that would be where you'd get the headwinds to gold. And you'll also have some institutions pivoting from the tech stocks or the industry looking for those sort of opportunities. So I do see a bit of a headwind for the stock market and some upside further for gold.
Do you still see $3,000 as a possibility?
I still see 3,000 as a possibility, Dave. And I don't like to make predictions, but I definitely think by 2025, sometime at end of 25, we could be in that sort of a range. And remember, we've moved that much of a range in the last 8 months alone. If you look back at the sort of that leverage, we go back to early 2024, David. I can't remember what the gold price was at that stage to where it is now. We've had probably a $400 move, probably, David, wouldn't we?
Yeah, year to date, look, the price of gold is up about almost 30% from the beginning of the year.
Yeah. So,
and actually, if you just consider that from here to $3,000 is significantly less than a 30% move.
Yeah. And I remember what we're seeing today, David, is actually we haven't even seen the big institutional money come into the gold mining space. To now, it's been driven by central bank buying, China, a lot of big headwinds, but we haven't really seen a lot of investors beginning to get into it, which I believe will actually increase the pace of increase of the gold price. We've seen a lot of deals go recently, but not to the level that it was way back in 2010, 11. And I do believe that will even bring more headwinds to gold. So, it's not way out on a limb to say we've had a nearly 30% so far. We could easily see another 30% growth in price of gold over the next 8 months or so.
When you say that institutions haven't been getting into the gold miners, why do you think that is? What's holding them back?
A couple of the things you said and you pointed out, gold has performed better than some of the miners itself, as a self. And also the size and scale of the industry now is so small that for the big institutions, it's hard for them to come down the lower level and buy into the small juniors because they've been so depressed in pricing. And so that, as the market goes and they get that readjustment, I do expect them to look for those opportunities to leverage that upside.
I'd like to just close off and ask about your experiences in the mining sector. You've worked for all sorts of companies before West Red Lake. What are the major differences in exploring with a company like West Red Lake versus exploring for a larger company that is already producing?
So the major producers obviously have a lot of cash flow. So, they're generating cash flow, they're generating profitability. So it's more about capital allocation. It's more about capital allocation and focusing that. And you get the opportunity to do a lot of exploration and growth. Whereas the the developers, as I would say, raising money is a challenge all the time. You're constantly raising money to keep the project moving forward. So that's part of the challenge. You're pretty much raising money all the time to keep the project moving forward. And that money needs to be prioritized into development so capital allocation is way more important in the developer space than in the major space. And also raising that capital is a key part of and keeping the profile of the company going. They're the major factors that I've worked on over the last number of years versus the big mining companies.
I've heard also that one of the major challenges for miners is finding human capital. So a lack of engineers. I know you have an engineering background yourself. Fewer people entering the workforce in the sector. Is that true?
Yeah, that is true. We are seeing that for sure. Definitely on the quality of engineers we're getting and their level of experience. And I think there's less people, but more importantly, there's less people with experience who are getting the young engineers in, David. As you know, there's probably there's tsunami of, I would say, baby boomers who were in the industry the last 20, 25 years, and they're retiring over the next 4 to 5, 6 years. And there isn't a lot of people with experience to fill that gap. With that experience of building mines and operations. So that's where we're seeing the gap, that mid-career level in particular, we're seeing a big gap in experience.
Well, what is your message for young people who may be interested in the space? How would you convince them to join the sector?
So look, I would give my own personal view. Like, today's mining industry is very, very diverse. It offers a lot of opportunity. It's a well-paying business. Like personally, I've lived in 12 different countries, David, all over the world, worked on projects in different countries, worked with integrated teams, built mines. You can see things grow. You actually leave an operation behind that's successful. So there's a lot of, young people today who want to create a social conscience and grow a business and be part of something real. That's very important in mining. That's part of how we build businesses successful. And you can do that internationally, and you can do that as a well-paying job. And it has a good future ahead of us. As you know, the talk of critical metals, the talk of the future of metals, etc. So there's a lot of opportunities for young people to get into the industry, get a lot of experience, and grow quickly in the industry.
Very good. And finally, for the audience, what is the one or two of the major developments coming up this quarter, or perhaps next quarter, that we need to be paying attention to for West Red Lake? Things that can add shareholder value.
Yeah. We have a pre-feasibility. We're just working on a pre-feasibility, sir. That's key for the project. It'll really outline the plan going forward, what the mine looks like, the opportunity, the economics of the project. That will be a key milestone for the project. The team have been working on that for probably 12 months now. So that's a key milestone. And the second milestone will be potentially around some financing, some opportunities as we do that. They're two key milestones as we move forward.
All right, we'll put the link to the website down below, westredlake.gold.com, so people can learn more about the company and follow company developments. Thank you very much for your time today. Shane, appreciate it. We'll follow up again soon for the next
Excellent.
update.
Thank you very much, David. Thank you.
And thank you for watching. Don't forget to like and subscribe.